Monday, everybody. Welcome to the game plan. It's time to get right back to action here in the stock market, in the crypto markets, and in the commodity market. So thank you for joining me today here at Verified Investing. We're going to take it right over here. Before we get started, just a reminder, there's 3 days left to follow us on Twitter, Verified Investing on Twitter or on YouTube. And again, this will be given away this Thursday live on air. All right. So without further delay, let's get right into the charts here. The first thing I want to talk about is some warning signals that I have for the stock market in March. All right, so we're just about to March. And one of the things that we have to recognize is the reverse repo is starting to come back to normalization. Now, reverse repo basically means the banks have been parking, or they were parking money at the Fed, all right, when the Fed was offering higher interest rates or higher, better deals than they could get out here in the U.S. or in other places. The money was being parked at the Federal Reserve. The Fed then was guaranteeing them to essentially come across and say, we'll give you that money back over time. Look at how they're giving the money back. So one of the keys here, guys, and this is really important to understand, is that this market, we supposedly are in a restrictive financial environment. But honestly, that's not true. And what you can see here is that this was restrictive starting in late 2021. All right, think about this. When did the stock market top out? The stock market topped out in late 2021, right? Right over here, okay? Right in this vicinity right here. That was when reverse repo started. Reverse repo, again, banks taking money and parking it at the Federal Reserve, which takes it out of the ability for them to lend money and push money into the system. If we look at this again, folks, take a look at this. This is reverse repo going up, and where does it top out? Right here in this period. And then the banks start paying it back in 2022 when the market's bottomed, right? Think about this, all right? When did the stock market bottom? In October of 2022. What did that coincide with? The top on reverse repo, because the Federal Reserve was starting to pump money back to the banks that they had parked. The banks had parked money at the Fed. The Fed was now starting to pay that money back, and therefore, again, the reverse repo facility was going down, but liquidity at the banks is skyrocketing. And the reason why I bring this to your attention is because as you get back into more of a normalized level down here, all right, we're not that far away now. We just have a little bit to go. The liquidity that's flowing back to the banks is going to start to be turned off or be minimal. And again, if you're someone like me and you recognize that the liquidity in the system is pretty much everything to do with whether stocks are going up or not. And think about this, all right, when there's a ton of money out in the system, the money chases momentum, which explains a lot of NVIDIA, explains a lot of the Magnificent Seven and those runs that they've had. All these things because, again, liquidity in the system chases what's moving, essentially. It pushes into and chases that moving. So what we basically have here is reverse repo. And let me clear off this chart so we can see it clearly. Reverse repo now is getting back almost, and it's not quite there yet, but normalized levels would be somewhere in this area down here. Just a little bit more to go. And just a reminder, that essentially tells us that we're at a point where the Federal Reserve is not going to be pumping as much money, if at all, back into the banking system. So again, supposedly we've been on a restrictive period, but that's not the case here. Frankly, you can clearly see that is absolutely not the case. As again, this is again parking money at the Fed, so it was taking money out of the system, which is why it coincides with the stock market top here in late 2021. When did the stock market bottom? When we were at the height of what was money being parked at the Federal Reserve, which was right here in late 2022. And as it's flown back into the system, stocks again have gone like this. At least let's be fair. We know that the amount of stocks that are outperforming are minimal. It's basically a handful, but that's what liquidity chases. It chases those. Now, the other thing to keep in mind here, guys, there's something called the short-term bank funding or secure program. I think it's BTFP, bank short-term funding, whatever it is. The point is the Fed has said, and by the way, this program that the Federal Reserve It's basically been an emergency lending program since March of 2022, right, or 2023, when the Fed was thinking the banking system here, when Silicon Valley was failing, when all of these banks were failing or being close to failing, they introduced this loan program. And this loan program meant that any bank could say, hey, we're having problems here. I want to borrow money from the Federal Reserve at basically almost zero interest rate. It was an emergency plan that the Fed did to stopgap more banks from failing back in early 2023, March of 2023. Well, the banks, what do you think the banks do? They use arbitrage. They say, oh, we can borrow this money for 0.2% or whatever, and then we can lend it out for 4.5%. Perfect opportunity. Anyone who thinks that the banks are not going to utilize this is ridiculous. They're going to utilize it. They're going to push money into the system. More liquidity into the system, right? Well, guess what? The Fed said on March 9th, let me draw this in or write this in, March 9th, guys, okay? I believe it's March 9th, which is just a couple weeks away. They are ending this program. There's no more free lunch, well, limited free lunch for the banks out there to just get cheap money and be able to lend it out at a higher rate, essentially an arbitrage situation. So, again, we have two significant liquidity drivers. They are coming to an end or normalizing likely in March, which means as an investor, we need to be aware of that. If you're someone, again, that believes that money in the system is an issue. By the way, if you read the latest Fed minutes from last week, the Fed is definitely concerned that these programs have actually kept inflation higher and will make it harder for them. They've addressed this. This is why they're talking so hawkishly and why they're ending these programs, is to make sure that it doesn't create that second pop in inflation. But again, as we can see, when liquidity gets sucked out of the market, we know that the market goes down. And when liquidity comes back in, the markets go up. All right, couple other charts on this macro Monday to show you guys. Take a look at this one. This is just your healthy reminder that an inverted yield curve does not mean that, again, we're not going to have a recession, and it doesn't happen when the yield curve inverts. It happens when we get out of the inversion. If you look at here, 1990, here's your recession right here. It's in gray. Hopefully you guys can see this, but essentially it was when we uninverted right here that the recession hit. Here's your inverted yield curve, uninverts, basically a month or two later, recession. Inverted yield curve starts to come back, it uninverts, recession. Here's COVID. We even had inversion going into COVID. Uninverted, we had that very short recession that the Fed obviously and the government came out and just flooded with liquidity. Here's your current period, guys. Huge inversion. We're getting closer to uninversion, but we're not there yet. But when it uninverts right here at the 0% level, that's when you have to think there's a recession coming over here, all right? And again, I love pointing that out because when we inverted initially, everyone panicked and was like, oh my gosh, we're gonna have a recession. It's like, no, it tells you that eventually a recession is coming, but you need to look for the uninversion of the yield curve for that to happen. All right, couple other charts on this macro Monday that I do wanna show you. This one's one of my favorites. I put this out over the weekend. This is showing that here are your stocks and the biggest gainers in terms of market cap. All right, so again, obviously NVIDIA, right? The recent gains by NVIDIA, monster gains just on the earnings. But again, 247 billion, 197 billion, 191 billion, 190.8 billion, 184 billion, all the way down this list. These are the biggest gains by market cap that we have seen basically ever. These are the biggest gains. I want to show you something. If you look at the dates that I've highlighted here, what we see is every single date is 2020 COVID or after. Is that a coincidence? The answer is no. It's because of this factor here. If you look at where we were pre-COVID with the Fed balance sheet, it was $3.76 trillion. It has gone up 102% since then. Think again, going back to the liquidity we were talking about, which was driving the markets up. Look at that massive liquidity injection, or essentially balance sheet that the Fed, remember, the Fed's balance sheet, it basically means that they're buying securities on their balance sheet, and when they buy securities, they have to pay someone for that. So that money goes into the system. So huge rise in balance sheet, 102%. This one is showing your M2 money supply, 15.5 trillion. We're now at 21 trillion, up in just 4 years, or a little less than 4 years, 39%. And lastly, guys, government debt. We know that the government here in the U.S. just loves to spend that money. And sure enough, 55% gain in government debt, which essentially is taxpayer, our money debt, is now up. So if you look at these, think about these in terms of liquidity. How much money printing? You know, this is huge money printing. This is telling you straight up that there's more money in the system. This is U.S. government debt, which again, government debt taking on, it means they're pushing money into the system and taking on that debt. So all of that, it coincides with these type of results, all going back to what I was saying about liquidity. Now, again, we're starting to see some signs here that maybe the Fed is starting to realize, oops, this maybe is not the best thing. Now, they can't control the government necessarily, but ultimately, if we get our house, our fiscal house in order, maybe that becomes more, realistic. But again, guys, we have to be fair. If you see the fiscal house come in order, if you see the Fed starting, it's going to mean stocks go down. There's no other way, right? There's no other way. You can't take money out of the system at a huge percentage like it's been put in and not create a recession. I'm in the camp personally that recessions are normal. They are normal. They are healthy. Just like you have your ups and downs, like a hill rolls up, it comes back down gently. If you don't screw with the system, it performs naturally. Yeah, no one likes a little downturn, but they're shallower when you don't screw with it. When you inject so much liquidity, it's like injecting a ton of drugs. What are you going to do? You're going to essentially create an issue where you kill yourself off, or the repercussions of getting off that drug, the withdrawal is absolutely atrocious. And that's what's happened. And that's why you saw 2008, 2009. I don't know how many out there still remember that, now 15 plus years ago, but nonetheless, that was a horrendous period for the economy, close to essentially one of the worst since the Great Depression. But same thing. What do you think is going to happen if we continue on this path? What type of downturn are we going to have to do to rebalance the scales? And that's the kicker there. All right, let's go through a couple quick charts here, guys. I want to just quickly show the NASDAQ chart here. Let me erase these lines. This is the only thing today I'm showing on the NASDAQ chart because it's that powerful. If you look at this chart on the NASDAQ 100, this is your dot-com bubble right here, okay? Okay. Then we go up here to 2022. That was, 2021 high. And look at where the current NASDAQ 100 is trading. Right up here at that level exactly. Now that, again, when you're thinking about trend lines, the longer they go back, the more powerful and important they are. If you have a trend line from yesterday to today or from Friday to Monday, it's not that big of a deal. Yeah, on a short time frame, it's going to play an issue, but not on a longer time frame. This goes back to 1999, guys. That is unbelievable how important that is. Okay. Couple other charts here. Let's take a quick look at the S&P. This is the one thing that I'm continuing to watch. This is a narrowing wedge pattern going back to October lows of 2023. Look at how the market is staying inside, but it's getting very narrow. We talked about this last week. Which way is it going to break? Is it going to break to the downside here? If it does, I think that's very problematic. Or can it break above for a little while? Can the rally continue? But as these narrow, it's got to break one way or the other. I would say within 2 to 3 weeks, and by the way, this is all coinciding with what I've talked about with the Fed ending that lending program, with reverse repo winding down. All of this tells us there's something on the horizon here. The question is what? All right, taking a look at Apple. Apple is still holding up here on this major trend line. Just a reminder here, if we look at this, it still hasn't broken, but if this breaks, that would be significant. Last thing I want to show you here before I flip over, and I got to keep moving along here, take a look at this chart of Amazon, all right? Amazon, pretty wild chart, right? Amazing. Like going back to 2000, this is your dot-com bubble, by the way, right back here. And then look at what we have right now. Incredible. Absolutely incredible. But one of the things I was showcasing here is I want to show you guys this. if you look at a crazy chart and you want to say, oh man, what the heck is this longer term chart going to be made of? Flip over to your logarithmic. I want to show you this because it's pretty darn cool. So if we go back, and this is logarithmic, and again, this is when you want to use, I mean, everyone asks me, do you use linear, regular charts or logarithmic? Logarithmic is for when you want to see major things that have happened a long time ago when price was way lower. That's why in crypto it works so well, because crypto prices have been insane if you go back 10 years to where they are now. What we can see is all of a sudden a chart that looked wacky starts to actually look semi-intriguing. And again, if we just do this, look at this. Look at that trend line right there. All right, this is going back now on Amazon to 2001 lows. Basically, the dot-com bubble burst, it dropped, and from that point on, look at that. All right, where did it bounce? Right there. It's right into that double top as well. So again, for me, as a trader, when you have long-term trend lines like this, it's worth it looking in terms of log, because you want to see maybe it breaks there, and that can give you a heads up or a leg up in understanding breakdowns or breakouts on these longer term view charts. Okay? All right, so that was one little chart I wanted to show you. A couple other things real quick, guys. Workday reports this week. I'm going to flip this over to a different color because I don't think you guys can see it that well. We'll do the RSI, and by the way, that's RSI at the bottom. The reason I want to show you this is, and again, I am not in this position. I do not have any qualms about it. I'm only pointing out some interesting things. The thing that I'm looking at is this move up here. Look at the RSI angling down. So if I zoom in on that area here, and we look at this, we can clearly see a negative divergence developing, right? Here you have higher highs, right? All the way up. We could draw a trend line, basically. What's the RSI looking like? Well, start over here and look at that. Clearly a downsloping negative divergence. Workday reports earnings after the bell today. Again, could it go up? Absolutely it could. But let's watch and see if this is an indicator, a good indicator going forward of this negative divergence. Lastly, I'll show you CRM. CRM, much the same here. They report earnings later this week. And if we look at this, same sort of thing, right? An upward sloping trend, meaning higher highs. But look at over here, very clearly, lower lows on the RSI. Okay, guys, so again, that's something I just wanted to quickly point out there on the charts. Follow me to the center screen real quick, guys. We're just going to take 30 seconds to thank Lux Algo. I plan on Wednesday to debut the signal on this very show. I want to show you a replay of how it works. So come and make sure you're tuning in on Wednesday to see the Lux Algo indicator that I've created. Let's take 30 seconds and thank Lux Algo.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, guys, here we are back. Of course, we're going to get to Bitcoin now. Bitcoin over the weekend had a little bit of a float up, just a couple days. Now, again, always remember, don't trust the weekend moves. There's too light volume. You want to wait to see how it reacts during trading, traditional market hours, Monday through Friday. Doesn't mean something can't push up or break out. It's just you want to be more suspect of it. So again, what we were doing is we were starting to trend down here going into the weekend, and then Saturday and Sunday both green, and then Monday already coming back in. Now we are off the lows here. But again, just remember from last week, I'm going to keep it as simple as possible for you guys, because I think honestly that's what I like. I like simple. If we look here, this is our previous high. As I said last week, that's the only level right now I care about at $49,000. All right, right now, anything, even a pullback to this level, you could bounce off of it. It would be a retrace to the scene of the crime. All right, upside resistance is basically 54,000 now. It'll slowly throughout the week move to 55 because, again, it's an upsloping trend line. So always remember that. That would be resistance. The only thing that would concern me here is if we get below 49,000 right here and we confirm, and I went over the confirmation signal last week, if that happens, then Bitcoin is in trouble. But right now, very simply, Anything in here, consolidation. If it dips here, scene of the crime. Let's see if it bounces. Only if it breaks here and starts trading below that 49,000 level do you need to be concerned. All right, couple other charts on crypto, guys. Let's look at Binance here. I want to show Binance real quick. If we look at the chart on Binance here, we can see again, this is finally playing catch up, which again is something of interest. If we just look at some trend lines here, I just want to draw a trend line here. So look at this high and look at where Binance is currently trading, right? So we take the highest point, basically going back to November 9th of 2022, and we could see that this pivot high right here is right where current price is. So you do have a little bit of resistance here. It's not a huge level, but you do have a little resistance. Now I'm going to show you the level that I think if it gets to, that might be a short-term top. This one, maybe, but I'm not that thrilled with it in terms of a short-term top. It probably can go through at least the 400 level. Well, look at this next level right here. Right in this vicinity, right here. I'm going to go back to the computer and draw a trend line as well as something else. So if we look at, and remember, it's all about confluence of levels. So if we take this level here and we draw it across, that's a good pivot point right there. And then what I want to do is I want to do a Fibonacci retrace, and I want to show you guys basically, okay? So if we look at the fibs, we basically see an alignment of fibs with that secondary level. There we go. We have the fibs pop up. And so essentially what we're seeing is that this high here, and here's your 50% fib level. Okay, so you're looking at a level between 450 and 465 right in this zone. That to me would be your likely heavy resistance in the near term on Binance, all right? So again, just kind of keep that in mind. And by the way, it doesn't mean it can't be rejected here. In all fairness, it's overbought short term, would make sense for a small pullback, but it wouldn't surprise me to see it go to that level where, remember, the more factors that coincide at a current price, the bigger the resistance or support level will be. All right, so think about putting down bricks, right? If you do one layer of bricks, it's okay. If you do two back-to-back layers, it's going to be firmer as a resistance. Lastly, Solana. Let's take a look at this, guys. Solana on the charts. We can see here, again, there's your longer-term trend line. You kept on retracing up to it, right? So it broke, resistance, resistance. Then you have this secondary trend line here. That finally broke. Now, again, if we continue to see the same pattern, you could see Solana retest here, right? Just like it broke and retested. But the thought process is that eventually it will come down even further, right? It's just kind of repeating the same pattern. Breaks, retrace, breaks further, then retraces the next one, and so on and so forth. Levels of support, you're going to have right here around 93 or so, and then back to your $80, $75, $77 to $80 level right there. Okay? All right, couple other charts. Obviously, we'll touch on gold real quick here. Gold, not a whole lot to update you here on gold. It's pulling back just a little bit. Last week was a tremendous week on gold, guys. It really was. Multiple up days in a row. Still hasn't broken out above this major 2070, 75, 80 level right here. That's the big breakout. But what I do see on the chart starting to form better and better, right? If we look at this up, what are we starting to form here? To me, that looks like a bullish consolidation pattern. And so if we can really break through this area here, test here and break out, this thing could have a breakout where, again, we could take a measured move from this low to this high, and you could map it out. And that would be, again, short-term target of 2,400-ish. I still have a 25 and change target. I just don't know, again, until we actually break out. It's basically the thought process I have. It's 12 months approximately from when we break out, which is when the high should be put in. So I'm waiting for that breakout to occur before we really get into that. Silver's doing minimal action. It's selling off a little bit today. Lots of support around 22. If we look at this is a new chart. Corn. This is an ETF that tracks corn. It's gotten crushed, right? I mean, we had the big move up with the breakout of the war with Ukraine and Russia and everything like that because of a lack of supply. And then you know what happens? Every other country says, wow, prices are so high of corn and wheat, we have to go plant some. And then an oversupply crushes prices. But again, what's the remedy for an oversupply? Price. The lower price gets, the less farmers will plant it going forward. And so eventually we have to start seeing some sort of base level. And again, just to go to the weekly chart here, where would weekly support be? I'm going to show you guys right here on this trend line, or put this trend line in. Basically 400. That's what I would be looking for. Look at that beautiful level right there, right through here, right through there, And then very, very close. We're not quite there. We're about 10 bucks away, I believe, but 10 bucks, maybe 12 bucks away on this chart of corn from hitting some major technical support. Okay? All right, guys. Just back to it here. As always, guys, let me just grab my basketball here. Do a little twirl here. But anyways, I think the point here is, guys, I hope you don't like Macro Monday. I'm going to continue to bring you these really important charts that I think are groundbreaking. Don't forget, follow Verified Investing. I think it's at Invest Verified on Twitter, and obviously our YouTube, Verified Investing YouTube, because again, that's how you're going to win, and we're going to start doing these prize giveaways basically daily. I mean, literally $500 to $1,000 a day. All you got to do is click that follow button. So make sure you do that. As always, you guys rock. The comments rock, and I'm going to throw this to Ben here. A little chest pass here. Have a good one, guys. Take care.